Welcome back. We are now hearing from Arthur Hayes about what is going on in the Federal Reserve, what the Federal Reserve is going to do in the markets and really with the debt situation, with the interest rates. But what I'm more concerned about is what this means for crypto. Where are we in this cycle? We've been talking about on this channel for quite a while that the top has probably already been hit. And in today's video, we're going to go over some of the charts. We're going to go over some of the psychological indicators that the market may be topping or already topped out. And if we haven't already topped out, what are some of the indicators that will bring us into the peak of the bull market? Because guys, there's a bull market and there's a bear market and there's sideways trading. And so the further we go in the bull market, the closer we are to the bear market. And the further we go in a bear market, the closer we are to a bull market. And I think that people's timelines are a little bit messed up this cycle. They're expecting the same things to happen at the same times of the year from the previous cycles. But we're in a different economic shape now. We are in a different world in terms of crypto. And we have some of the big major players in the world of finance entering the crypto space. So does this mean there is no more bear markets? Does this mean there is no more bull markets? I don't know. We're going to be discussing it today. And by the end of this video, I think that you guys are going to have a clear understanding of what is going on in the markets from a market perspective, from a hyping up the market perspective, what's going on in the traditional stock market. And we're going to kind of determine whether this area that we're in the middle of 2025, exiting 2025, is a bull trap or a bear trap. Make sure you guys are subscribed to this channel. We upload every single day of the year to bring you the latest happening in the financial world. We do deep dives like this into individual, concepts in the market like bull trap or bear trap. We do go over a lot of interviews from players in the space like Arthur Hayes, which we're going to be hearing from in a little bit. And sometimes we do deep dives into individual cryptos, but today we're going to be kind of deep diving into the general market and understand where the sentiment is and where the markets are going. So let's get right into it. So we're going to start right here. Heidi Blockchain Chick said, take your personal emotions out. And remember, when we're investing, we have to remove our emotions. We have to look at the market objectively. Where are we in the market right now? This is a psychological chart of the market cycles. Now, guys, this was created many years ago, and basically the markets follow this, whether you want to believe it or not. And when we look at a price of Bitcoin, for instance, right, forget about the altcoins for just a minute here. We're going to get back to that. But if we just look at the one-year chart on Bitcoin, you can see that in December into early 2025, we had a double top. Market came down. Now we have reapproached those all-time record highs just above $110,000, and it doesn't look like the support is there, right? You can see kind of like a double top right here. Now, again, I'm not a chartist, and I don't necessarily believe charting is a way to really determine where the markets are going. I really like to kind of look at the macro, what's really going on in the general markets, what's happening in the debt market, what's happening with the Federal Reserve, with sentiment in the market. But the charts can give you indicators of resistance, of, trouble, right? Why have we not got above $110,000 when we hear about all these companies buying Bitcoin, when we're hearing about, a crypto Clarity Act and the regulators getting, more involved and active in a pro-crypto sense, but the market can't get above $110,000. That tells me people are selling. And it also tells me that there's a lot of other dynamics in the market that will determine where we are in the cycle. And you guys know, I love the halving tracker. This is free on X. And this is one of the only charts that I don't see basically a lot of influencers and YouTubers talking about. But this shows you the where we are in the cycle. The black line is where we are in this cycle. The blue line is where we were in the previous cycle. The green line, the cycle before that. And then the purple line in the first cycle. There's you can't see it because my logo is blocking, but it has an explanation. 2012, 2016, 2020, and now 2024. And so we can see very clearly on this chart, at least in the last two cycles, that the market peaked out basically between 500 and 550 days after the Bitcoin halving. Now we are approaching the 500 days We're at about 430, 450 days when I'm recording this video since the halving. And that means that from 450 days till about 550 days, that means 100 days. If we're just going on this chart, 100 days from now, we're going to see the market top out. Now, there is a theory that there's an extended cycle, but we're going to be kind of talking about in this video where I don't know that we are going to see an extended cycle based on all the factors that we're going to be discussing. Now, I am not saying that the charts are going to be exact to this 550 days, but I'm using this as a guide along with all of the other factors and all the other indicators that we talk about on this channel and some that we don't to really determine where we are. And so this is where we're at, right? We have some users that are reporting complete liquidation of their portfolio, right? Not by getting liquidated or margin called, but actually choosing to close out their positions. Mr. Wall Street, about 15,000 followers, said, current status, altcoins sold all, stocks sold all, Bitcoin sold all, exited all the markets and shorted Bitcoin at $108,500. Now, his explanation for this was kind of the macro environment that Bitcoin has been wavering at this above $100,000 range for a while and hasn't really been able to move. And so all indicators show that the price of Bitcoin will probably go down a little bit, even if just for a short period of time. But the bears are saying, yeah, we're going to keep going down. And the bulls say, well, that's just going to be a buy the dip opportunity. But what I've been explaining is there's going to be a point in this cycle, and we may have already hit it, maybe we haven't, where every dip that's bought is going to keep dipping and dipping and dipping and dipping. A lot of altcoins have experienced this over the last year. Bitcoin hasn't just yet. But there is a potential that this will occur. And so we have one side that is saying sell everything. And then we have the other side, the bulls, who are, not just in Bitcoin bulls, but they're also MicroStrategy bulls or these derivative products of crypto. So this user in the irresponsibly long MicroStrategy group, which we talk about a lot on this channel, said, all right, let's conceptualize the earning power of the preferred stock on MicroStrategy. Currently, and I'm going to kind of skip a little bit, but it says currently MicroStrategy is issuing about $100 million per week via the at the market, basically selling these this debt preferred stock at the market. If we assumed annual growth rate of 30% for Bitcoin and cost of capital at 10%, that's 20% gained or $20 million annually. So if they were to issue these over the course of 52 weeks, 1 year, we are about roughly $1 billion of profit in a year off the preferred ATM at the market. But wait, there's more. The preferred at the market issuance isn't constant. If we assume a growth rate of 10% per week, why are we assuming, by the way? Indicator number one, we never assume in the markets, right? You guys know what assume means. But anyway, if we assume the growth rate of 10% per week of preferred issuance, then $20 million becomes $22 million, then $24.2 million. And by the end of the year, a really large number, closer to 2 raised to the 7th power, which is about $2.5 billion of annual earnings a year from 1 week of preferred ATM issuance. But wait, there's more. And again, these are all assumptions. Equities generally trade based on their projected earnings over the next 15 years. When you map out this $20 million annually is $300 million over the next 15 years from 1 week of at the market issuance. When you factor in growth rate and longevity, you're talking about trillions of dollars worth of earnings that are being generated via simple issuance of securities, and more capital is sucked into the vacuum that is Bitcoin. So a company that he presumes will create trillions of dollars worth of earnings over the next 15 years only has a market cap of $100 billion, MicroStrategy. And I'm supposed to be concerned about paying $1.85 for $1 of Bitcoin? He says, nah, dog, I got your 85 cents right here. Okay. So basically, he is very, very bullish on MicroStrategy, believes that these debt issuance vehicles have no risk. Here's the deal. These convertible debt issuance at the market that MicroStrategy is doing on through Strife, Stride, and Strife, this is for institutions. This is not for people like you and I. And the fact that retail people are saying, well, Cryptoviser retail hasn't joined the party yet. That's why Bitcoin and cryptos are going much higher. And I'm like, no, retail is in the party. They're in MicroStrategy. They're in Stride. They're in Stripe. They're in Strike. These are for institutional investors. These are for banks, not for people like you and I. Because you're assuming all of these things are going to happen for MicroStrategy exactly as you think, with no hiccups along the way and no risk. And that's just not how the markets work. And in fact, this kind of sentiment, and by the way, it's not just this user. I mean, we're seeing a lot of this in the MicroStrategy, in the MetaPlanet, all of these Bitcoin treasury company sector. People are extremely bullish, like more bullish than, I mean, all I could think about was when I start seeing these things is in the last cycle, I said these are the indicators that we have to look for in the next cycle. It's this overhype, overconfidence based on nothing, just based on hype. I mean, in the last cycle, it was FTX. And I told you guys, I was like, Sam Bankman was going on Bloomberg, playing video games and answering questions without saying anything. He would go on for 20 minutes just talking. And somebody who's in crypto and understands what's going on in the crypto world, I would look at the screen and they were like, oh, wow, Sam, you're a genius. You are so smart. But the thing is, they just didn't know what the fuck he was talking about because he wasn't talking about anything. And people didn't notice that. They just kept saying, wow, he's a genius. He's so smart. But they didn't do any research. He literally wasn't saying anything. He would say, well, you know, if Bitcoin goes up forever, then we're going to keep going better. And plus we have the FTT token and we have Alameda and we have, Terra Luna is totally great. And I was like, what? Terra Luna went down. Like it went to zero. And I'm like, well, wow, he's a genius. And I'm like, wow, those were top signals. Those were very, very high top signals. Anyway, and by the way, risk signals. And so the belief that MicroStrategy is going to keep paying these dividends, no. They want your money now to buy the Bitcoin now. They don't care what happens in a year from now or 2 years from now. And as we've covered, although these are paying dividends now, if MicroStrategy stock price goes down and Bitcoin goes down in a bear market, let's say the Bitcoin price goes down by 50%. Let's say we go to $50,000. This is below MicroStrategy's buy-in price, and their stock price is already double what the NAV of the Bitcoin is. And the NAV doesn't even represent what you own as a shareholder because there's so much debt issued. And the debt, they get first dibs in the event of a bankruptcy. Now, I'm not saying strategy is going to go bankrupt, but there's the potential that's possible. So if that happens, MicroStrategy can pay these dividends, and then they'll halt the dividends. And if you're holding these debt products, these debt instruments, when they pause the dividends, not only are you going to not get dividends anymore, but the price, the par price is, I think, 100 for these. The price is going to drop substantially. And by the way, I've read other things about, if MicroStrategy is selling Stride at $100, and these are debt instruments, right? But they're tradable on the stock market. So if you own one of these, you're going to get 10% dividends every year. But the 10% dividend is based on this price and not your purchase price. So if you purchase, let's say at $100, you would be getting $10 a year in dividends in the perfect world, right? But if this drops down to $87 from $100, now you're getting $8.70. You're not still getting $10. And if it drops down to $50, now you lost 50% of your principal from $100, and you're only getting $5 per share, not $10 per share. A lot of people don't seem to understand that either. And so these are risks. These, for me, are the indicators of where we are in the cycle. And so let's listen to what Arthur Hayes says, arguing the Treasury, not the Federal Reserve, is key institution driving global liquidity and Bitcoin's future. Because remember, it all comes down to the flows. Let's listen in.
Back in third quarter of 2022, the Fed is raising rates. It's doing 75 basis points meeting. inflation is surging, and Janet Yellen, the Treasury Secretary at the time, has to figure out a way to pump the markets to make sure that the Democrats stay in power, doing her job, funding the government. And what did she do? She noticed that there's $2.5 trillion of excess money sitting in the Fed's reverse repo facility. And she engineered a policy whereby she issued more treasury bills and treasury bonds than the Treasury Department had been doing in the recent past, which siphoned money out of this facility that was sterilized on the Fed's balance sheet and injected it into the global money markets. It was re-leveraged, and a bull market in stocks, bonds, crypto, gold, everything took off starting in the third quarter of 2022, in spite of hawkish Fed raising rates, maximum quantitative tightening, reducing their balance sheet. But the Treasury said, "Fuck that, we're going to juice the markets, $2.5 trillion, let's go," right? So Powell didn't matter in 2022 under a Democratic regime. He doesn't matter today under the Republican regime because, again, Besson has tools like you talked about in the recent Bloomberg interview, I think April 11th or 12th. He's got buybacks. And, I spoke about and I wrote about how Treasury buybacks on a second order effect add liquidity to the global markets. And Powell will sit back and say, "Oh, I'm going to look at data and maybe I raise rates, maybe I won't. Quantitative tightening will proceed or won't proceed." But he's a sideshow. The real show is at the Treasury Department. What traders should be really looking at is the quarterly refunding announcement and listening to what Besant says when he gets on television and speaks at all these different conferences around the world.
Well, so that's a very interesting thing because a lot of people are focused on the Federal Reserve when they're going to lower rates and thinking that this is going to be the catalyst that's going to drive the market higher. But that may not be the case anymore. And by the way, I don't think that the Federal Reserve is going to do anything substantial in 2025. I think that this is setting up for a new Federal Reserve chair in 2026. And so potentially we have already or will be hitting the top very shortly. And once we hit the top, that means we go down. Now, there's going to be a lot of people in the market that say, "But Cryptoviser, we're going to just drop by 25%. Well, they believe in what's called the bull trap, right? Which is we go down and they're like, "Oh, this is the buy the dip moment. Buy the dip moment. We're going higher." Meanwhile, we're literally all-time record highs. And people are like, "Oh, the bull market hasn't even started." It's like, just because it hasn't started for your coin doesn't mean it hasn't started. And what we can see, all the other indicators in the market are telling us where we are. So Arthur Hayes said, listen to Scott Bessent, who's the Treasury Secretary. So let's listen to what he said just the other day as well about Bitcoin and crypto and how this is going to tie in to the overall traditional financial ecosystem. Let's listen to him.
There's a new book called King Dollar, a journalist who's followed Treasury for about 40 years.
Yeah.
And he talks about every time there was a narrative that the U.S. was going to lose reserve currency status, why it's never happened.
Mm-hmm.
And
because crypto, that seems to be a threat to the dollar, doesn't it?
I think it's the opposite.
Oh, really?
I think stable coins could reinforce dollar supremacy because with stable coins could end up being one of the largest buyers of U.S. treasuries or T-bills.
Mm-hmm.
So all of a sudden, if you are using a stable coin in Nigeria that's backed by the U.S. dollar, you don't actually have to have dollars. It's on your phone. You can transact. So I think there's a very good chance that crypto is actually one of the things that locks in dollar supremacy.
And is that why it was crucial that Donald Trump get involved in crypto rather than trying to constrain it like Joe Biden was?
100%.
I think constrain's too mild a word. I think make it extinct.
Oh.
So this administration's commitment to digital assets, it's innovation because there's so many other things that happen around digital assets. And also, it's one of those things that it's one of the most important phenomena that's happening in the world. And the U.S. just ignored it. There's a new book.
Now, I don't know if you guys caught it, but he said that the previous administration was trying to make Bitcoin and crypto extinct. It wasn't that they were just trying to suppress it. They were trying to eliminate it. And so, yes, Donald Trump getting into office, regardless of what your politics are, was critical for the crypto industry. And we saw the market move based on that. But the implementation of these things is going to take time. Even if we're hearing a lot about the Stablecoin Act and the Genius Act and all of this occurring. But I want you to look at the timeline, and I want you to look at things from a macro perspective, zooming out and removing that emotion, removing that bias from what's going on, right? Because there's a lot of things going on in crypto, and the money is flowing. This guy Yudi, who's a Bitcoin maximalist, he said, remember when I said at $80 Circle price, that there won't be an altcoin season and you should just buy stocks instead. And everyone got mad and dunked on him for days. Well, we're up 3x since then, and that was 2 weeks ago. And basically, they're talking about where Circle price is, right? Circle is the USDC issuer. And now it's over $200. I don't know why it's not updating the price, because the markets are open, but we're looking at a $200 price, and the IPO price of Circle was $30. And so we went from $30 to $200 in a 1 week, 2 weeks. This is incredible. And by the way, the stock price of Circle is the valuation, the market cap, is basically getting very close to on par with what their actual holdings are. Now, I don't know what the valuation of Circle is. Do I think that $200 or about a $40-50 billion valuation is high, or even if we get to the $60 billion valuation, which would be on par with their market cap? Yes, I think that's extremely, extremely high, because they're not making that as much money as people think, right? They are making money, and this is going to continue to expand and grow. But I don't know that it's investable at these levels, right? I mean, if we look at Tether, it's $155 billion. And people were just a few weeks ago talking about, if Tether were to IPO, what would their valuation be? And people were talking about $500 billion. Tether disagrees. They think it's actually more than that because of their Bitcoin holdings. I think they have like 100,000 Bitcoin or something like that. They make like $1 billion a year or something like that in profit. And they are more widely used than Circle, but that may change. I mean, look at Tether's 24-hour volume, 62 billion, and Circle's is 9 billion. I do think this is going to change as we see more back-end integrations and usage of USDC, like Scott Bessent was saying. But we still have a little bit of a ways to go till we get there. But Yudi is correct. It's not just Circle. It's all of these other Bitcoin treasury companies that are launching that are going up substantially. And people are focused on MicroStrategy, but MicroStrategy play is over. Now it's these other companies' turn. And when that's over, there's going to be other people who come in, they're going to be the exit liquidity, and then those people are going to move on. We see that happening, how the cycles operate. People go in early, the price goes up, they sell as new investors are coming in, they move into something else that is probably going to move next. This is why you hear about the narratives, right? Where are the narratives moving? AI, gaming, real world assets, stablecoin integrations, all this kind of stuff. These are all narratives that will tell us where things are going. And kind of like what we were just talking about, the US Senate Democrats crossed the aisle to help the Republicans pass the crypto bill. So we know the Senate has now passed the crypto bill, and people are anticipating the House doing it. Now, there's probably going to be a lot of back and forth when that happens, but it's going to set us up for like probably a multi-week or a multi-month argument. At the end of the day, people have to understand what's happening around the world right now, right? And we see the situation in the Middle East escalating, and this is causing uncertainty, and the uncertainty is what could potentially top the market out, right? And by the way, the big players are getting involved also. JP Morgan is now pushing their JPMD pilot on Base. This is their new stablecoin called JPMD, JP Morgan dollar, I guess. And they're going to, they say that their tokens beat stable coins. Well. If it's not the bank that said crypto was a scam. Anyway, they have now launched JPMD on the Base network. The pilot was confirmed by an executive at JP Morgan's blockchain division, Connexus, that told Bloomberg that a fixed amount of JPMD tokens will be transferred to crypto exchange Coinbase in the coming days. The transfer will be facilitated through Coinbase's Layer 2 Base blockchain. They said that the transactions will be denominated in dollars, with additional currency supported after regulatory approval is granted. Upon the completion of the pilot phase, which is anticipated to span several months, Coinbase institutional clients will gain access to JPMD for transactions. Now, this doesn't necessarily mean that everyone's going to be using it, but the banks are testing this for their back-end integrations, right? Think about Zelle. Zelle is an interbank, I guess, like money transfer system, right? But they're still using legacy ways to transfer the money. And so if they're using stable coins instead, again, this is going to be a long transition. They're trying it with institutions first, and then institutions will start pushing it out. There'll probably be a lot of incentives and cash back and offers, for discounts on purchases by utilizing these stable coins, because there's so much competition in the stable coin space, and most of the stable coins are going to be back-end integrations. But guys, by the bottom line is, like, stable coins are not really investable, right? If we look at Circle makes money by holding dollars, right? And they're basically a treasury company, right? They're buying treasuries, they're getting 5 or 6 or 7 or whatever 8% back, and then they're splitting it with their customers. But even the crypto czar is saying that this is going to unlock trillions and bring banks back into Bitcoin and crypto. So we're going to listen to what he says. But I want you guys to think about this, because a lot of people keep saying, but Cryptoviser, these are all very bullish things. And I'm like, yes, but it's buy the rumor, sell the news. The rumor was Trump was going to get into office and make everything pro-crypto. This is the news, right? Buy the rumor, sell the news. This is the news. And while, listen, the markets can definitely go higher from where we are, but again, that's still sell the news. This is not buy the rumor. This is not buy time. We're at all-time record highs. We're at uncertainty in the geoeconomic space, in the geopolitical space, very, very uncertain. Companies are continuing to lay their people off. The Federal Reserve has showed no signs of cutting rates. That doesn't mean they're not going to. They've just not shown us signs yet. And so there's nothing to price in there. And yet everybody's still extremely bullish on crypto, saying that this is the buy time. It's like $100,000 is the buy time? Well, I don't necessarily know about that. Let's listen to what David Sachs says about everything that's going on. Because again, I'm showing you both sides. I'm showing you the pros, the cons, the bullish, the bearish, the neutral, because by the end of this video, hopefully we're going to have a better understanding of where the market is and where the market's going, and kind of putting all of this together, because there's a lot that we're talking about in this video. There's a lot of different angles that we're looking at about where the market is. And all of these data points that we're talking about may not even indicate where the market is going. But I think generally speaking, over the longer term, it is. But in the short-term period, it's 2 years from now until the next Bitcoin halving. A lot can happen. Let's listen to what David Sachs says, AI and crypto czar of US.
The act, I think you'd see traditional financial players getting involved in it, and that's why the float is expected to grow from, call it, roughly 250 billion to trillions of dollars, and that would create more demand for the US dollar internationally. I think you could see other economies start to dollarize from the bottom up, as their citizens would prefer to use US digital dollars as opposed to whatever fiat currency they're using, and that would create potentially trillions of dollars of new demand for U.S. Treasury. So I think this bill is a major piece of legislation. I think it's a fantastic bill just on its own. I think that the House should go ahead and take it up, and I think they will take it up, and I think they're going to put it on the president's desk very soon.
What about businesses taking it up? As you say, people waiting in the wings, reports, Amazon, Walmart wanting to have their own stablecoin issuance. What is the regulatory oversight going to be like? You say, of course, it's put in stone in terms of the law. What about the resources for the regulation? Because there's going to be a lot to analyze, it feels like.
Yeah, so stablecoins will be under the purview of the banking system, and banking regulators will look at that, and stablecoin issuers will have to go through a regulatory process, and they'll get approved. And like I said, there'll be quarterly audits. And I think that the bill will provide the framework that will give confidence to a lot of traditional financial players to enter the space. And so
And as we just showed with JP Morgan, they are. But here's the deal, guys. They're talking about stable coins. And yes, stable coins are making digital assets less, I guess, taboo for these banks to use. But there's no real money in stable coins. It's basically just treasuries. It's basically just, a certain percentage. And listen, this can definitely grow, and it can definitely be a business. But everybody, I feel like, is overhyping this, saying that, oh, well, all the altcoins are going to pump because of this, or Bitcoin is going to pump because of it. It's like, no, we've already had stable coins. Having 50 more stable coins is not going to necessarily do anything. And think about it. Previous cycle, we had all these stable coins. They call them algorithmic stable coins, right? Terra's US dollar. They had I don't know, 15 or 20 other major ones. All of them failed. All of them failed. Mostly because they were over trading and over leveraging. So kind of bringing that into the purview of the traditional financial markets may make it a little bit safer. But guys, when Wall Street gets involved in crypto, in stable coins, it's not because they want you to get rich. It's not because they want the price of these cryptos to go higher. They want money. They want more money. And so they don't care whether you're using dollars or USDC. They just want a piece of the action. And that's kind of where we're going. And they understand. They're not giving any, JP Morgan, they give 0.001%. You could put in $1 million, you're getting $1,000 a year in interest. Like what? Meanwhile, with stablecoins, you get 5%, 4%. Some DeFi protocols even more. So the banks have to come up to speed, otherwise they lose out, right? And so we are seeing the transition. CryptoZar is telling us, and we're seeing it underway. But with Circle, for instance, right, there's a lot of hype around Circles and USDC in the public IPO. But this user on X said, did you know that Coinbase is getting half of Circle's main source of revenue, which is interest on their USDC stablecoin? Actually, Coinbase is getting 100% of the revenues on reserves stored in Coinbase and 50% from other sources. And so effectively, Circle is owned by Coinbase. I'm not saying directly owned, but I definitely think that the growth and success of Circle is in large part because Coinbase highly integrated with it and started, like I said, incentivizing users, right? You could have 4%, 4.5%, maybe even 5% at certain times by holding USDC on Coinbase. Can't do that with a bank. And so they were very smart in kind of that partnership. But now that they're IPO, this could be a net negative for Circle and also for Coinbase. From an earnings perspective, right? Because Circle, they don't want Coinbase to have all of their revenue or even a large portion of their revenue. And so I think that eventually we're going to see that very good relationship potentially break up a little bit because they're going to have to, Circle's going to have to really make money. They're a publicly traded company. And if they can't, well, where do you think the price is going to go? And so this is where we're entering some really, really crazy territory. $200, we're almost at the 10x. And this could provide an opportunity to short or buy puts on it. But I remind you, there's still very low float with Circle stock. And this is another indicator, well, we can still go higher from here, much higher, because there's not a lot of float and there's not a lot of borrowing to short the stock itself. But come 6 months after their IPO, which puts us in around the beginning of December, well, all of the investors or a large majority of the investors' shares unlock and then they can sell them. And so if they bought in at $30 IPO price and we go up to $300, $400, $500 and then their shares unlock, what do you think they're going to do? Now, the MicroStrategy crew and the Bitcoin maxis, they'll say, oh, well, they're just going to hold it because it's going to be worth this much forever. And no, they're going to sell. The day that it unlocks, they're going to sell. And the speculators are going to front run that selling by selling before those shares unlock. And so come the end of the year, Circle, if it doesn't kind of, I would say, stabilize before then, we're going to see massive, massive destruction of the valuation. I'm not saying permanently, but think about it, right? All the IPOers, they bought in at $30 and we're almost at 10x. Potentially by December, we'll be at 10x or even higher than that. And listen, there's a lot of people say, Cryptoviser, why not recommend buying this? First of all, I don't recommend anything. I'm just telling you my analysis in the markets and you can do what you want with that. But I don't know that it's worth the risk, right? Because this is a kind of a hype move. And we're seeing this not just with MicroStrategy. I'm going to show you some other ones in a minute because it even includes Hyperliquid, which is the hype token. So the hype token is actually getting hyped up. And again, there's definitely the potential and likelihood that Hyperliquid is going to go much, much higher in valuation. But are they really worth $12 billion in market cap when there's lower market cap coins and projects that do a lot more, have a lot more usage, daily active users, true actual use. I mean, if we think about Solana at the beginning of the year with the meme coins, there was a 97% reduction in revenue for Solana validators from December into February. 97% in 2 months because the meme coin narrative completely fell off. And so what happens when hype is no longer hyped up? We're going to get to that in just a few minutes here, but let's continue on. And so yeah, we're seeing Coinbase stock also $75 billion. And I remind you, like I thought I pulled something up about this, but Coinbase valuation right now is $75 billion, right? And Circle's valuation is about $40 or $50 billion. Circle got there in a few weeks. Coinbase, it took years. And by the way, the IPO price of Coinbase was $350. Never came back from that. $350 back in 2021, which was the top, right? Came down, went back up a little bit, double top, and then right back down from $340 down to $50, right? So about an 80% reduction. Yeah, 80% reduction. There's a potential we're going to see this happening with Circle as well at some point in the future. And by the way, all the Bitcoin strategy companies. Now, I wanted to show you this. This was a Grok analysis because I went into Grok and I asked Grok to analyze all the publicly traded Bitcoin mining companies and list them in order. So this is saying below is an analysis of publicly traded Bitcoin mining companies with AI integrations or expansion plans based on 2025 SEC filings and public reports, ranked by the extent of their AI initiative. Each company's AI efforts will be summarized 100 words or less. So basically, these publicly traded Bitcoin mining companies, if we are at the final stages of the bull market, it's very important that we understand what these Bitcoin mining companies are doing, because in the previous cycle, they spent all of their money, all of their Bitcoin in the bull market, and in the bear market, they had nothing. And a lot of these companies went bankrupt or had very, very poor results. And so now that we're potentially heading into a bear market, or maybe already in one, there is a need for us to kind of look ahead and say, well, which of these Bitcoin mining companies are actually going to make it? Because everything I see on social media is Marathon Digital, Riot Platforms, Cypher Mining, a Bit Digital. These are the best. These are the best. And it's like, in a bull market, yeah, they're probably going to do well. But in a bear market, where do these companies rank? And so the companies that are not pivoting, or at least somewhat pivoting into AI capabilities, they're going to be screwed in a bear market. Where these other companies that are involved in AI, they're going to have an upper hand because they're going to be able to make money in the AI space when Bitcoin is not doing well. So these are companies with AI integration or expansion plans. Now, Bitfarms, we talked about extensively on this channel, and Grok said Bitfarms is aggressively expanding into AI with a $300 million debt facility from Macquarie for 500 megawatt Panther Creek high performance compute data center, targeting the end of 2025 for completion. Again, they are preparing so that in the bear market, 2026, maybe 2027, they can still make money. This is going to be key to seeing which of these Bitcoin mining companies are going to make it, right? And so going back to the beginning of this video where we were talking about Yudi saying, the Bitcoin maximalist, where is the tweet? I know I had it up here. Oh yeah, right here. Saying that there may not be an alt season, and the alt season may actually be stocks, these Bitcoin proxy or crypto proxy stocks. And we also need to sometimes think outside of crypto and think about AI. That's why we're talking about these AI Bitcoin mining companies. And so Bitfarms show that SEC filings highlight plans to leverage their existing 461 megawatt power capacity for AI loads, aiming for 25% of their revenue coming from high performance compute by next year. They're also optimizing mining facilities in Canada, US, Argentina for AI, focusing on low-cost renewable energy. That's big. Core Scientific, one of the other companies we've been talking about years on this channel. A lot of people on my videos made a lot of money on this stock in the bear market because this is one of the companies that went bankrupt because they had no money in the bear market. And they make a lot less. So Core Scientific's Q1 filings detail a $3.5 billion 12-year deal with CoreWeave to provide 200 megawatts for AI-driven high-performance compute. The company is converting 100 megawatts of its 1,200 megawatt capacity for AI loads, targeting $290 million in annual revenue. Additional plans include expanding hosting services for AI clients across Texas, Georgia, and North Dakota facilities. Core Scientific's AI focus complements their 28 exahash per second mining operation. And by the way, a lot of these companies, when you actually look at their performance, I had Grok also list these by, I think this is list the response from highest hash rate to lowest. So you can see Marathon Digital has the highest hash rate, almost 60 exahashes per second. This shows how much of the network they actually, I guess, control or mine or whatever. Their total power right now is 474 megawatts. Their pipeline is just another 200 megawatts. So that would put them at about 700 megawatts of energy. CleanSpark, which is the next highest hash rate, 40 exahashes per second. Currently, they have 600 megawatts. They're going to expand to 400 megawatts. So that means that they're going to be at 1,000 megawatts, which would put CleanSpark higher than Marathon Digital. BitFuFu, yes, that's literally the name of the company. They're going to have about 1,000, right? 651 plus 300. This is the pipeline, what they have, they're working on. So that will put us, BitFuFu, right under 1,000. Riot Platforms, they have 700 megawatts. Their pipeline is 1,000 more megawatts by the end of this year. So that would more than double where they are. That would put them at about 1,700 megawatts. Core Scientific is currently at 1,200 megawatts with an expansion plan of 500 megawatts, which would bring them in line with where Riot Platforms, Riot and Core Scientific would be the same. And by the way, these two companies, a lot of the Bitcoin mining maxis don't even talk about because they'd rather, CleanSpark is better. Marathon Digital is better. It's like Marathon Digital doesn't even seem like they're going to be focusing on AI at all or expanding their power capacity. The power is going to be the key in my view. Anyway, moving on. Bitfarms, you can see here, 461 megawatts of power, and they're looking to expand 1,400, which would put them as number one in terms of power capacity. That would put them at 1,861 megawatts if they're able to achieve this. And you could see the other ones, they're not even coming close. TPC is total power capacity and pipeline power capacity. So you can pause the video if you want to see those. And again, these were sourced from 2025 SEC filings. So you can see the second, Core Scientific's AI integration, we talked about them, Hut 8 mining. Hut 8's Q2 filings outline a $200 million investment in high-performance data centers with 150 megawatt dedicated to AI workloads across Alberta, Texas, and New York. The company holds 10,300 Bitcoin, generating 6% of revenue from AI. Plans include scaling AI infrastructure to 300 megawatts by the end of Q3, leveraging 310 megawatts of existing power. TeraWulf, this is another company. I think that they went bankrupt as well, or they just went really low. They may not have went bankrupt, but they think that their price went extremely low. Made a lot of money on TeraWulf as well throughout the years. And TeraWulf, their filings highlight a 20 megawatt AI facility operational by Q1 of this year with liquid cooling GPU workloads. The company leverages 200 megawatts of 95% zero carbon power, planning to expand to 300 megawatts by the end of 2025 for AI and mining. It's big as well. BitDigital's Q3 filings report a $250 million acquisition of 200 megawatts high-performance computer data center for AI. So they're all transitioning to AI. AI, Bitcoin, high-performance compute, these are all going to be in one. And so these companies that we're talking about here, and this is in order of their AI plans, this is telling us which companies are preparing for the next cycle and which ones are not. I mean, think about in in the digital space. You got Apple, you got Samsung, you got Motorola, you have Google, right? All of these different devices. And if you think about Apple, they're releasing yellow iPhones and curved edges on their screen. And meanwhile, these other companies are literally putting in all crazy new features that are on Android way before they're on Apple devices. And Apple basically is fine with their business model, right? Doing things the way that they want to do it, how they want to do it, in the time frame they want to do it. Let's launch a yellow iPhone. That will be the most breaking thing that happened in years. They're not innovating. And whether their stock price goes up or down, I don't care. What we're looking for is those gems in the rough that we can see significant growth. And so regardless of where we are in the cycle, top, bottom, or middle, it doesn't matter. We know there's going to be another narrative next. We know there's going to be another focus next. And so we want to get ahead of that. And I think getting ahead of that is looking at which companies are getting involved in these AI capabilities and are going to adjust pretty substantially. Looks like some of these Bitcoin miners are going to do really, really well. We'll have to wait and see. But anyway, that was kind of a side conversation in this whole thing about whether we're in a bear trap or bull trap. But look at where we are in the cycle, right? Fidelity sold, ARK Investments sold, Bitwise sold, but BlackRock bought $640 million of Bitcoin. And so this kind of goes into the narrative of what we were talking about previously on the channel, is that Wall Street controls the markets. This is the Bitcoin ETF flows since the beginning of June. You can see the beginning of June, a little bit of outflows, but pretty much in the center of June, it's been all inflows. And when you see hundreds of millions of dollars daily of inflows and some of these outflowing, it just means that people are taking profits and some others are getting involved. But remember, Wall Street is in control. So these Bitcoin ETFs, they're like, if a company wants Bitcoin, but they don't want to do what MicroStrategy is doing or GameStop is doing, they're going to buy the Bitcoin ETFs. And I would imagine some of these companies are trading the Bitcoin ETFs as well to make some extra money in their, in their earnings. But yeah, there's a lot of movement in the ETFs. We're also seeing basically positive flows in Ethereum ETFs as well. We have not seen Ethereum move. Some of the stable coin usage and integrations are going to benefit Ethereum because Ethereum is the key interoperability layer for most of crypto. And but I warn you guys, there's still a lot of things going on here, kind of going back to what we were talking about with MicroStrategy and people making plans for the next 15 years based on MicroStrategy debt facilities. It's like, that's going to save them. It's like, if you're buying MicroStrategy debt with the anticipation of getting, extremely rich, and that is your sole focus, good luck. Good luck. That is, the risk there alone should just be maybe a small diversification of your portfolio. People are putting 100% of their portfolio into these debt instruments because they're, I'm going to make 10% a year. Meanwhile, Metaplanet is issuing $210 million of USD in 0% ordinary bonds to purchase additional Bitcoin. But what Jim Chanos, who's been bearish on these Bitcoin treasury companies, but he's bullish on Bitcoin, he said more Bitcoin treasury silliness. According to the term sheet of this Metaplanet issuance, these 6-month bonds may be redeemed earlier upon the bondholder's request. Then what's the point here? The press release itself? Yes, Jim, the press release itself. That is the key, because most people in crypto are not going to read what Jim Chanos just said here. They're not going to read this in the actual term sheet itself, which says basically that they can redeem early redemption of all the bonds. So they're issuing $210 million of debt for these convertible bonds. But they can go, the people who issue these bonds can go anytime and ask for their money back. And then what would that cause? What would that create? The force to sell some of the Bitcoin if they don't have the money for it, or issue more debt, which is a Ponzi scheme. And so people are not seeing the risk here. I am definitely seeing the risk. Many of you definitely see that. I would say the majority of my viewers see the risk here. But remember, there's a lot of people who don't. Those people are the exit liquidity. They are. Like, granted, Wall Street is still buying into the market, and so this is exit liquidity. But when we're rotating, these people are going to be all exit liquidity. Buy the dip, buy the dip, buy the dip, buy the dip. I'm putting all my money, I'm remortgaging my house. And by the way, we're already seeing that. I'm remortgaging my house to buy Metaplanet, remortgaging my house to buy these debt instruments on MicroStrategy. Imagine you put your whole life savings into this, think you're going to get 10%, and then we go into a bear market, the price drops substantially, and the dividend disappears. Then what? Then what? And by the way, go say that to one of these MicroStrategy bulls. They'll say, "You're an idiot. That's never going to happen. How could you even think that?" It's like, wait. So you think that you found the infinite money glitch and that nobody is going to be counter trading that? Of course they are. Of course they are. And again, these are not for everyday people. This is for institutions. The fact that everyday people are getting involved in what institutions should just be getting involved in because of this 10% risk. What happened in the last cycle? Everybody lost their money in Celsius, Voyager, 3 Hours Capital, all of these companies because they wanted 11% interest on their crypto deposits. So they were sending all their money to Voyager or Celsius. I remember Celsius was like, "Oh yeah, just put your money on our exchange. It's totally safe. We're not rehypothecating it at all." And that's literally exactly what they were doing. They were taking your money and reinvesting it in the market. And they, in a bear market, it's losses on top of losses, and then they have to double down and keep doubling down. And so you have to look at the risk. A lot of people don't. Once you really get in the investing game and you remove the emotions, yeah, sometimes it's better to just be fully in cash. Because guys, they're not lowering rates. And so you can get guaranteed earnings through holding stable coins, treasuries, all these different things. And if they lower rates, you're not going to be able to get those, right? You're not going to be able to stay in cash. You have to get out of cash when they lower rates because there's no the inflation is going to outpace the 3 or 2% that you would get. And so now that we have high rates, this is the time to be in cash. And people don't get this. They're like, no. This is the bull market because they're going to cut rates. And it's like, well, when they cut rates, then we can look at that. But we don't know when they're going to cut rates. And assuming that they're going to cut rates is foolish because, again, the Federal Reserve doesn't care about your portfolio. They're looking at the macro. They're looking at zoomed out trillions and trillions of dollars of money moving around. And so, yeah, there's a lot of silliness going on. So then it brings us to this, right? I'm going to show you this video from Arthur Hayes asking about Hyperliquid.
Can Hyperliquid
because Hyperliquid, I mean, like we said at the beginning of this video, it's the number 11 crypto when I'm recording this video, $12 billion. And all it is a DEX. It's just a trading platform, right? Like there's nothing amazing about this, especially when you compare it to cryptos that have real use cases and real users and real products and interoperability that have significantly lower market caps. Hyperliquid represents a cutting-edge blockchain platform specifically designed to enhance efficiency and performance of DeFi apps. At its core, Hyperliquid introduces novel layer 1 blockchain that meticulously engineered from the ground up to optimize performance and scalability. Okay. Who cares? What does it do, right? Anyway, because if it's a DEX, does their coin really have value? Not really, especially if people stop using it. But meanwhile, we have BitGo is not messing around with a Lion Group treasury company raising $600 million. So effectively, BitGo said, big news from Lion Group, which is LGHL on the stock market. It says the firm is making a major shift in on-chain finance with $600 million facility to launch the world's largest hyper-liquid treasury. The treasury will hold Hype, Solana, and Sui, with BitGo providing custody and staking to support a strategy focused on execution-first blockchains. So now we're not even in just the Bitcoin treasury companies. Now we have Solana treasury companies, Ethereum treasury companies, and Hype treasury companies, and Sui treasury companies. So I was like, okay, what exactly is this all about? And I actually went into the SEC documents, and I also had Grok analyze this. So effectively, what they are doing is, I'm not going to read through the whole thing. You guys can read it if you want, but they're going to be essentially offering. I have to actually pull up the Grok conversation in another screen because I was like, what is going on here? So essentially, what Grok said is that there's going to basically they're going to create more shares that are going to be convertible. So they're basically like issuing debt that are going to be convertible. And I said if the current shares is under 1 million, because currently the shares of this company, LGHL, is under 1 million, right? You can do the math here yourself. The market cap is 1.79 million. You can see that on the screen. And we divide that by $3.33, which is the current price. So 500,000 shares currently. And basically, this filing from June 18th, this SEC filing about this raise for Hype Coins, basically I said if the current shares is under 1 million, but the convertibles in this filing will add potentially 5.8 billion shares, not million, billion shares. Okay. I mean, I couldn't even believe the number here. But if they create 5.8 billion shares, what would be the dilution? And basically, you would have 0.01%. If you hold one share of LGHL, and all of these shares that, or all of the convertible bonds or notes that they're issuing are converted to shares, you're going to have 0.01% of the new company. That's according to what Grok said. Grok said the June 18th filing indicates that convertible notes and warrants could add up to 5.86 billion shares, 5.7 billion from those convertible notes, and 150 million shares from warrants. The total potential post-conversion would be approximately 5.86 billion shares. The current shares is 585,000, representing about 0.01% of the total potential convertible shares. And so at the top of the market for both SWI's at all-time record highs, Hype is at all-time record highs, and Solana is close to all-time record highs. The fact that all three of these coins are literally at all-time record highs, all time, and that they're going to dilute the current shareholders by literally 99.99%. I don't know how that's investable for the general ecosystem or the general public. But that doesn't mean the price is not going to go up, because people are going to probably buy into this like they were doing with the other Bitcoin strategy companies or treasury companies, and Circle is going super high up. But these irrational moves in the market, right? There's no reason why any normal human being understanding, first of all, most people are not going in and actually reading the SEC filings or analyzing it the way that we're doing that on this channel. But I don't think that anybody would invest if they're going to get 0.01%, especially, guys, this is like final value extraction for the cycle, it seems. Because not only are they going to have you buy 0.01% of the new company or the fully diluted share, right? But if the stock, if the crypto price, if they're buying now at all-time record highs and the price keeps going higher, the billionaires are going to rug pull that, right? They're going to sell their coins, and then all these coins that have been purchased at elevated prices that are now in this company are going to decrease in value if the billionaires sell, if we go into a bear market. And what would that do for this? So now you may have 0.01% of the new company fully diluted. But if the price of all the underlying assets drops by 50, 60, 70, 80, even 90%, which is very possible, especially for hyperliquid, right? Because I'm about to show you this video from Arthur Hayes, and he says, what happens to hyperliquid when Coinbase and Robinhood launch perps? Now, this is one of my longer videos of the year, but I think that the information in here is so critical and important, because I want you to remember what happened in the previous cycle. Internet computer, major crash. Litecoin didn't hit all-time record highs. Cardano did 100x from the low to the top, but clearly there was manipulation, and we found out that there was manipulation because FTX did not have internet computer, did not have Litecoin or Cardano listed on their exchange, but they listed perpetual futures. Perpetual futures are derivatives. And so you can manipulate the price of the underlying asset by manipulating the price of the derivative. And that's exactly what FTX was doing. That's what perpetuals are there for. And so if Coinbase and Robinhood launch perpetual futures on Hyperliquid, which is a competitor to them, what do you think that's going to do to the price of Hyperliquid when it's built on a gap of air? And the reason I say it's built on a gap of air, SWI and Hyperliquid, these are both built on a, there's no killer use case for either of these. They're maybe being used right now in the bull market, but a lot of this is billionaires pushing this. Billionaires are getting free coins that they got for being early advisors or early investors. These are at all-time record highs and don't even have a fraction of the adoption or use cases that we see in some of these other blockchains. So a 90% reduction in Hyperliquid would bring it to about $1 billion, which is probably the correct valuation for Hyperliquid compared to where we are today. SWI, same thing. That's a 90% reduction. So imagine that. You're buying now this lion group because they're buying these altcoins. And now, because we're at the top of the market, and this is where FOMO starts to build in, where people are like, oh shit, altcoins are not moving. It's really the stock. So I need to buy into this stock. And that's the point. This is max value extraction. The billionaires know this. That's why they're doing this now. They didn't do this last year. They didn't do this in the bear market. They didn't do this before Hyperliquid is at all-time record highs or SWI is at all-time record highs. They're waiting for all-time record highs because they know that you're going to FOMO. Maybe not you guys, but a lot of people are going to FOMO. They know that a lot of people are not going to read the SEC filings for this and understand the dilution. And the dilution is just looking at the shares of stock. It's not even looking at the potential drop in the price buying all of these at all-time record highs. When I am seeing companies buying at all-time record highs, when I'm seeing individuals buying at all-time record highs, how could this not be the top of the market? And by the way, Michael Saylor said he's going to keep buying at the top of the market forever. But again, this is not for you and I. BlackRock can deal with MicroStrategy stock going down by 50%. BlackRock doesn't give a shit. There's a problem if your portfolio goes down 50%. If your 401k or your retirement plan goes down 50%, that's a huge problem, especially if it never goes back up there because they just keep issuing and more debt. And so for me, this is a bull trap because yes, we can go much, much higher, but we don't know until when. The Federal Reserve, by the way, I'm going to show you this video in a second. I've completely actually, let's show you this and then we will wrap up kind of the overarching analysis and summary because I think that this is critically important. A lot of people are not getting it. We have a very small channel here and that's amazing because if we had a channel like these other YouTubers with millions of subscribers, what we're saying here, everybody would be selling today, right? And so the market would crash even faster. We're preparing and understanding the risk model and what's happening here. Let's listen to what Arthur Hayes says about Hyperliquid with Coinbase and Robinhood listing perpetuals.
Can Hyperliquid justify its valuation in the face of...
Whoa, I'm playing that way too fast. We'll go 125 speed.
Can Hyperliquid justify its valuation in the face of a Coinbase and Robinhood perp exchange that targets the wealthiest retail degens in the world, Americans? So when it comes to Hyperliquid and you look at their active addresses trading and it's something like 20 to 30,000, that tracks. Because if you are in a location where you can't trade on a centralized exchange for whatever reason, Hyperliquid's where you're going. Which obviously the one problem that I see potentially with the valuation and the multiple is what happens when Coinbase and Robinhood launch their perps sometime this summer in the United States. How many of those 20 to 30,000 people are Americans who couldn't trade perps anywhere else and Hyperliquid's their thing? And now there's an easier option that's, direct. They can wire money straight from the bank account and start trading perps. Maybe they're not going to get 100x leverage and it's going to be lower, but it's going to be much easier than dealing with all the intricacies of an on-chain trading venue. So I think.
And by the way, once you're starting to see a lot more public trades of these 40x longs or 100x longs, it's also another indicator of max value extraction from the market. And so once you get to that point where you're in max extraction mode, which we started at the beginning of the year, I mean, you guys heard from the the guy who was building the Argentine meme coin, and he said they extracted $100 million from the protocol within 1 day. And it's like, wait, what? $100 million? And so that was really a huge red flag in my viewpoint and in my thesis to the overall market, right? It may have been the first, but it's not going to be the last. The same way the Terra Luna, it went down in the beginning of the FTX crash year. Then we had Voyager, Celsius, BlockFi, 3 Hours Capital, and then FTX. But they all failed, from the smallest all the way up to the largest. And so there's a lot of risk out here, guys. There is a lot of risk. It doesn't mean we're not going higher, but as we're going higher, this is going into the euphoria mode where people are not paying attention. Going back to the beginning of the video, where are we in the cycle with no emotions? Are we in disbelief, hope, optimism, belief, thrill? A lot of people think that we're in the belief phase or the thrill phase. And most people can't see that we are in the euphoria or even the complacency phase. I mean, many altcoins are actually down here in the depression phase, where people are realizing that their altcoins are not moving this cycle. I mean, we're starting to see that in the conversation around Cardano. I mean, since Charles recommended converting ADA, selling ADA to buy Bitcoin and stable coins, the price has dropped. And I suspect it's going to continue to drop because people are realizing that is their only hope, that there's no interoperability, there's no DeFi, there's no major integrations or use cases. The DeFi is continuing to drop, staked ADA continuing to drop, developer ecosystem. We've seen project after project that was funded and paid to build on Cardano, they've left. They went to other chains. And so that we're starting to see that panic of people like, oh shit, we're at the end of the cycle, and they did not achieve what we thought they were going to achieve, right? Or what we were going to achieve as an ecosystem. And people are going to, that's when you start to see the accelerated selling. And that's when you start to see liquidations, major price drops, a lot of volatility. But these bull traps are going to come out, right? We're going to see coins dropping 30, 40%. People are going to say, oh, this is the dip to buy. And they will buy that dip. But as they're buying that dip, smart money, people like you, billionaires, they're going to be selling into those dips because they understand the macro environment. They understand the psychological moves of where we are in the market. They understand the Bitcoin halving tracker. And so all the bulls are going to say, no, buy the dip, and they will buy that dip. But that's a bull trap. And a bull trap, we may go higher. And as we go higher, they're going to say, you see, all the bears were wrong. The bears are going to lose. That Jim Chanos is shorting MicroStrategy. He's going to go bankrupt. We may see some of those. But generally speaking, that's the trap. That's the bull trap. And we're going to keep going lower. People will keep buying the dips. 10 dips, they'll keep buying. 20 dips, they'll keep buying. Remortgage their house and buy a dip, not realizing a bear market beginning, you got at least a year, 2 years till you get out of the bear market and start to see some positive price moves. Because once the confidence is lost and the accelerated decline in the market starts to occur, it's going to take a while for people to feel more comfortable getting back into the crypto game. And we saw that in the last cycle. A lot of people even got their money back from FTX by now. They're never touching crypto again. Anyway, let me know what you guys think. We covered a lot in today's video, a lot of really in-depth material about the overall market sentiment and where we are. Let me know what you guys think down below. Don't forget to give the video a free thumbs up. And if you watch this whole video, let me know in the comments, and I will definitely try to respond. Other than that, I'll see you guys on the next video. Invest responsibly and crypto on.